Good morning. Good morning. Here to learn and share. I see you in here. Good morning to you. All the tweety birds are chirping. That's the remix. You know, back in the 90s, you had to have 90s and 2000s, you had to have really the 2000s. Back in the 2000s, you had to have a remix. You had to have a remix, the bad boy era. You had to have a remix. I'm trying to get my IG together, y'all. Y'all bear with me. Y'all bear with me. Uh, y'all bear with me. Live. How was y'all evening? Did y'all sleep well? Did y'all sleep well? Go to YouTube. What are your plans for the market today? Today is the last day of the trading week. What are your plans for today? All right. How was your week? How was your week? Did you have a good week? Did you have a poor week? Y'all know what I like to do on Fridays. If I've had a good week, I'm not giving any of it back. If I need to just scratch my itch to go into a trade, I'm going to flip over to Sim. How was your week? Did you have a good week? Man, the third quarter has begun. We're starting it off with a short week, looking like it's going to be a red week. Is the fear of the market dropping going to just come out because we're having a red week? Are we going to panic? Think the market's going to the lowest of the lows? No, we're not. We could care less if the market went up or down because we understand how to trade it both ways. And for our longer term investments and our longer swing trades, we understand that the market coming down is just a viable event if all of the dots connect. And that's why understanding how to read this price action, and that's why understanding the concepts that ICT teach are so important. And reading the price action is part of his concepts. Also, he didn't make reading price action up. I don't want nobody to say, oh, he didn't make it up. But reading price action is a part of his concepts. But I separated the two because he didn't invent reading price action. There you go. So, if this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, please allow me to say thank you. Along with that, welcome. For always tuning in to Tim's Tidbits, hanging out with me and my homeboy back here, Spidey, and my beautiful wife back here in the corner, aka my sweetie. If you don't know who I am, my name is Timothy Lee Racine. I get on Algos every single day, twice a day, Monday through Friday, once at 9 a.m. Eastern Standard Time, once at 6:30 p.m. Eastern Time. And I talk about the price action in the hopes to help someone like you, yes, you, get your aha moment when it comes to trading, investing, and all things stock market. Now, full disclosure, for the newer people, we are in the phase of Tim's Tidbits of full out sprint. This is when we giving it our all. Because I've come on Al Gore's internet for YouTube, that is. I've come on YouTube for better than a year now. I think it was last February when I moved over to YouTube exclusively. And by the time I got to YouTube, you know what I'm saying, I had already shared most of everything that I knew already of understanding ICT's concepts. And then I started doing it again on YouTube, and I got playlists for other stuff you can go back and watch. But we've done all of the sharing of the knowledge, right? Anything new that I learned, like ICTV dropping new stuff, new gems, you know, and now like the stuff comes to me quicker because I understand everything else. So whenever he dropped new gems, I share it with the community like, hey, ICT dropped this. This is how I see it. This is how I understand it. But we're beyond all of that now. So if you're new to it and you want all of the education type stuff, there's playlists that you can go visit on my channel and on ICT's channel, and you know, to get the education part of it. But right now we're at the point of watching the price and really digging into why is it moving like this. That's the key piece that, like, Michael calls it, this is mentoring. Michael said, this is mentoring, sitting with you every day and watching the price print and explaining why it's doing what it's doing. That's the mentoring. The other stuff, like all of the content on his YouTube page, said that's not mentoring. The mentoring is sitting and watching the price, right? And when he said that, I had to sit back and think about it. And I'm like, man, you know what? He's right. Right? Looking at videos that have already been recorded, right? That's just basic education. That's basic sharing of knowledge. But sitting side by side, we used to call it right seat, left seat, you know what I'm saying, on different jobs that I had, right seat, left seat, right? And just talking through it as it happened and explaining why it's doing what it's doing in real time. That's mentoring. And I was like, yeah, that makes so much sense, because a mentor sits with you and walks you through it. If you go to a job, right seat, left seat, right? You're sitting on the computer. They're talking you through how to open up that job order for that customer that's coming into the motor pool. I worked in a motor pool when I was in the military. I worked in the motor pool when I did the same thing. I did whatever I did in the job I did in the military. When I got out of the military, I kept doing that same job because I was a government contractor in the same motor pool that I was in when I was in the military. And then when I retired from doing that same thing. So when I talk about work, a lot of times I have been doing the same thing since 1994, because I went into the military in 93. So from 1994, I have been doing the same job from 1994 until I retired in 2021. The exact same job for all them years. Y'all do the math on that. My math ain't mathing. But, and then I said, you know what, Tim? You tell these people every day that you're not a mentor, but you are a freaking mentor, because you sit with these people every day and look at the price and explain why it did what it did in the best way that you understand it. So thank you all for making me realize that I am a mentor. My wife had been telling me this forever. You are a mentor. I fought, I kicked, I screamed. I'm not a mentor, because when I was in the military, I was a NCO. And when I got out the military, I said, I do not want to be in charge of another adult. I'm getting a job where I'm not in charge of another adult. I only have to be responsible for myself. And that's what I did. And at one point in time, I was forced into a leadership position, and I hated it the entire time because I don't like being in charge of other adults. For one, I feel like all adults should just be able to do adult things and not have to be like babysat, right? I'm not saying there's nothing wrong with being a supervisor or manager, but I don't want to be, because everybody's not an adult mentally. So I don't want to be in charge of anybody. But mark the day, April 6, 2023, at 9:12 a.m., I confess that I am a mentor. And I'm happy to be a mentor because my only desire is to help somebody like you get your aha moment. Do I have anything for sale? No, I don't have any education for sale. I'm just here on Al Gore's internet sharing my thoughts of how I understand it for the free 99. So hopefully that helps. Good morning, Michelle Tucker. Since I'm looking at the chat now, let's say good morning to everybody. Good morning here, Lunch. I said good morning to you already. Good morning, FC. Good morning, Hines. Good morning, Will. Good morning, Trey. Aloysius' mom. What's going on? What's going on, Aloysius' mom? Long time no see. How are you? Glad to see you. Welcome back. Welcome back. Welcome back. Welcome back. What's up, Audrey? What's up, man? I don't even understand how I'm going to see Walt. What's up, C Walt? What's going on, Otis? Good morning, Laverne, Rhonda Green. What's going on, Angela? What's up, Big B? What's going on? I ain't going to try to say the last name, Sonya. What is that? Bougieth? Bougiest Sonya, are you the bougiest? Said what's up to Michelle. Spring breaking. Okay then. Spring breaking. Accept God's assignment. Tim, accept God's assignment. Well, you was typing fast, FC. You got 4/6 2023. Tom accepted God's assignment. You was typing fast. You ain't put the second slash in there. You spelled my name wrong. Thank you. You put it, but I told you, man, it's 2023. We all read typo. Y'all ain't got to fix them typos no more. Period. The bougie. Hey, man, let's get into it. Good morning, private company. What's up, Mags? Hey, speaking of Mags, I saw that Mags. I really appreciate y'all for staying tapped into the what's up, Thomas? I really appreciate y'all for staying tapped in to the channel memberships. As I told y'all, we all everybody decided that they like me charting on TradingView. Well, me explaining stuff on TradingView. So I decided to invest in, paying for the pro plan and paying for data so that, I don't have to keep jumping back and forth between NinjaTrader. And as long as there are enough people in the channel membership to cover the cost of the TradingView, I will pay for the TradingView pro plan with the proceeds from the channel memberships. I can't remember what I was doing. I can't remember what I was looking for. I can't remember what I was looking for. So I don't know. Anyway, let's get into it. Maybe I'll remember in a minute, but let's get into it. Let's see. I used to work in the motor pool on ambulance for Fort Benning. Okay then. If you ever brought anything to the LRC, we had moved over there on Harmony Church in the new buildings in the area that got tore up by the tornadoes back then, and then they rebuilt the new facilities out there. If you ever brought anything over there, you probably came to one of the offices that I wasn't a PPC clerk no more. I was the system analyst at that time. So you probably came to my motor pool. Make sure you get that yearly plan in November when they drop their prices for the yearly subscription. It's a good deal. Worth it. Okay then. That's what's up. They hit me up with the 30% off. Because I tapped in for the free 30-day trial, and then right before that 30 days up, I'm gonna jump on that 30% off. I'm gonna go ahead and get that 30. Yes, thank you for your service, Sonya. You shouted out Mags when look. Oh yeah. The memberships. Thank you to everybody that stayed tapped in to the memberships. And then I was gonna go in and look for, because I remember seeing that Mags. I think Mags had got a fancy dancy badge. That's what it was. We're at 2380. I thank you all for sharing this with others. We're at 2380. I want to thank the 75 members that are still channel members. We have 75 people that are still channel members. We got 59 black spiders. Oh, I'm sorry, y'all. I'm looking at the wrong screen. We have 59 black spot. Here we go. We got 59 black spiders. We got 11 spider gold, and we got 5 spider silver, accounting for 75 channel members. I thank you for staying tapped in to the channel membership. I have been still trying to provide, value. You know what I'm saying? I still been trying to provide value. I know before it was like the tier model, what the different tiers. I was given more value. So I still try to provide value in a way that's not a burden for me. Because if it starts to feel like work, my old retired gene kicks in. And even before that, like way back, if anything starts feeling like work, I start to lose interest in it because it's work, it's draining. I like to do stuff because I enjoy it. But let me stay on track because I will get off track easy. Market is about to open in 9 minutes. Right? Power moves. I think we shouted out power moves the other day when they joined on the live. I think we did that. If not, shout out power moves. I thank you for joining. Going down. Let's check the fancy badges. Trey Martin got a fancy badge, been a member for longer than a month. Q got the membership. Y'all remember Q Barbecue? Q been a member for longer than a month. I don't know if we shouted out Day, Tyree. I can't remember. I remember E. E was the last one I remember. But Tyree, Day, Q, Trey, just in case we didn't shout them out, really appreciate it. Really appreciate it. Being a kid, got a fancy badge. Antonio Tribble got a fancy bag. And Mags. It started, I think Mag, was it Mag? Yes, Mags. Mags is the one that I remember seeing the badge on. So shout out everybody that consistently supports the channel in a financial way. Even the eraser liquor. I'm not gonna call any names. I don't know why my mouse is just wiggling like that by that person's name, but especially even the eraser liquor, you know, I really appreciate it. Hey man, let's go ahead and get into it. It's 9:23. The market is about to open. Yes, it was. You can get for like $100 in November. Okay. Don't forget to hit like. Appreciate that. Appreciate that. He'll learn the shit. Always pulling up with the hard hitting. Hey, look at that. I see some 1 minute divergence going on right there. Y'all see that? Some 1 minute divergence. Drop these 60-minute candles. Base drop. We just dropped down below midnight over there. I'm seeing that yellow line is midnight. Let's go ahead and get into it, man. Let me hold on. Give me 1 minute. Let me set my my London line. I set my midnight line last night before I went to bed. I went to bed rather late last night. I didn't go to bed until like 2 o'clock. So I didn't set my London. I was trying to stay up so I could set my London line, but I did not. Okay. All right, so that's set. That's set. Just so y'all will be aware before we flip over to Trading View, this blue line right here, I don't know if y'all can see it. Let me make it a white line. This right here is daily is white, I think. Yes. That 4102.25 right there on that dotted white line right there, that's consequent encroachment in between this new week opening gap that y'all can't see. Now, that white line right there, I put that there yesterday. If you want to know how I do that, when I want to know what consequent encroachment, I have to sneeze, I think. If you want to know what consequent encroachment or the mean threshold of anything is, only thing I do is I get a Fibonacci and I got a template that's set to just show that one line. Like if I go to the default, right, and I load the default in, right, see, it's nothing more than a Fibonacci tool, and I run it from the high of the lower, anything, like whatever range I'm looking at. But in this case, it's going from the high of this new week opening gap to the low of this new week opening gap, right? I connected it between the high and low of those, and then the 50% is the consequent encroachment, right? So whatever, so, and then the only thing I did, I just made a template. I just made a template where it says consequent encroachment or mean threshold for all the different time frames, because I got like different colors, so I'll know what time frame it is. And then so now boom, it looks like that. And all I did was edit out the the price where like the every other price on there except 50% is the only one that's visible. All the rest of them is not visible on the Fibonacci tool. So when I load up that template, it just and I got it extended to the right. So it just give me a line at 50% and that other junk won't be on my screen. Now, that is consequent encroachment in between these two new week opening gaps, right? I put it there yesterday to see if we was going to have the event horizon event horizon entry. That's ICT's. I don't know how it works because I don't remember him going into detail, but the way I understand it is the way I look at it as, right? With the event horizon, when you get halfway in between, right? If the price gets trapped, if you're going down and the price gets trapped below, it's going to continue to the next new week opening gap. If it gets down and price gets trapped above it, we're going to stay. We're going to go back to the new week opening gap that we left. You know what I'm saying? So as you see here, yesterday, price did not get stuck below. It quickly got back above and we went back to the new week opening gap, right? And when it got right here, this right here, if you're in the nature of going against the grain, this area right here would have been the area where you would have been looking to go long. After seeing that price did not get stuck up under the consequent encroachment in between these two new week opening gaps right there. That's where you would have been looking to go long. Matter of fact, let's make this morning's topic this. Instead of just discussing the overnight price action, I told y'all we sprinting now. We're going to go, and because I don't plan on trading today, it's the last day of the week. Y'all know if you have a good week or a bad week, I don't trade on Friday. Good week or bad week, Friday, I don't trade. Right? If I've done nothing all week, then I will look for an opportunity on Friday. But if I had a good week, if I had a bad week, I don't trade on Fridays. The only time I trade on Friday is if I haven't saw any opportunity throughout the week, and then I'll take a trade. Now, if you're here to get overnight price action and you want to get your ideas for the morning, since the market is open, the market is open, the market is open. Last night, after closing, we just came down. And that is, let me see. Let's go to 1 hour. The 5th. We closed. We came down. We went up. Came back down to a fair value gap. Went up. Took out the buy side above the consolidation. Dropped down. Just came down. Looked like we made equal lows right here. Came below this sell side right there. And now we're bouncing off it a little bit. That's the overnight price action. If you're going to trade, y'all couldn't see my screen. Let's do that again. Right? We closed. We came down. Pushed up. Right here. Made relative equal highs. Pulled back down into this BISI right there. Nice reaction off of it. Came up. Took out the buy side above those relative equal highs right there. Came up into this bearish order block. Dropped down. Came down. And right now we look like we're about to attack the sell side up under there. And that's your overnight price action. If you're going to trade, trade safe. If you're not going to trade, please take copious notes so you can come back and study what you saw today. I'll see y'all tonight at 6:30. Now let's go back. What did I say we was going to make the topic on? Oh, this right here, right there. We was talking about. Let me go prep the chart. 4102. gotta do it a better way. New week opening gaps. Yes, I was gonna say it should be on there. Fibonacci tool. Fibonacci tool. Fibonacci tool. I hit. That's what I wanted. I was close. 14.25. 40.89. Hey, those things are a little bit different. Those numbers are a little bit different. Oh, you know what? This one of the ones where it go back so far that the price is a little, cause see right here, this right here is 2 ticks difference. It's like 2 ticks different between those numbers there. And that's when I was talking about when you go back so far before the contract switch over, the numbers be a little bit off on the different platforms. So charge it to the platforms. All right, so I put that in a good spot. I put that in a good spot right there. Okay, so now we're gonna, only thing we're gonna leave on there is, but no, we can leave the new week opening gaps on there so we can see where they are. All right, so now let's go into that. Since we talked about it, let's be about it. We talked about it, let's be about it. Okay, so let's break down what it did. And I'm not offering any guarantees on any entries. All right, thank you, Otis. Thank you, Here to Learn and Share. We talked, Stacks. What's up, Stacks? We talked about that last night when I said you're not hungry. Your stomach ain't growling because you got all that chalk in your mouth from licking the erasers. Look at God. We just talked about that last night. And Stacks pulled up with the hard-hitting question for his friend. Y'all know how I am, man. Y'all know I'm silly. When my tickle, my mama say, what? The other day we was doing, oh, my son. What is my sweetie on here? Baby on here. What was that Timothy said? What that? Hey, come here. Come here. Say what? Huh? Come here for a second. Hey, I'm sorry, y'all. Y'all know how I am. I can't get into it until I do this. I'm sorry. What that? What was when we was riding with Granny the other day? And you said something, and I started laughing so hard, and Granny was like, your tickle box is just turned on. What did you say? I don't remember. But you remember when I was like laughing, like I couldn't stop laughing? Yeah. Golly, he can't remember either. But my son said, son, because my kids are so me. Like, my kids are so me. And he said something, and it was like, it was so inappropriate. You know what I'm saying? And I couldn't stop laughing because it's something that I would say. And my mom was like, your tickle box is just turned on. And now Stacks done started it. I'm sorry, y'all. I'm sorry. Let's get back to what we was talking about. Looking at the event horizon. Okay, so yesterday when price started dropping, right? Price was, and we started coming down below. If like, this is an hourly candle right here. This is the 10 a.m. candle. So we started dropping it like it was hot, right? And so I ran a Fibonacci tool in between these new week opening gaps to look for opportunity, right? Look for opportunity. The bias for the week was bearish, right? We talked about that in the beginning of the week, looking at the market making a new high on Tuesday and then selling off, right? And so the sentiment was bearish. So looking for opportunities to sell, right? For the trades you want to hold for more than 5 or so points, looking for opportunity. You want to look for if you're looking for trades that you want more than roughly 5 points, you want to look for opportunities that goes along with the bias, right? But you can go in and get 5 points with the bias or against the bias. The market presents them to you, right? You just have to know how to find them. Now, ran the Fibonacci in between this new week opening gap, the one on the bottom here. Let me go in and only show what needs to be shown. I only want to show what needs to be shown. So I need that one and I need that one. So everything else does not need to be shown. I could have did that a very easy way. Okay. So in between the two new week opening gaps, Dollar, I don't need you right now. So in between the two new week opening gaps, right, that's consequent encroachment there, right? When price started to drop, right, first thing I did was run a Fibonacci. I ran a Fibonacci tool in between the new week opening gaps to get the consequent encroachment, right? Again, just any ICT concepts, right? The way I understand them is when your price is above a PD array, you look for that PD array to support price. When price gets below a PD array, you look for that PD array to resist price, right? So put in the Fibonacci tool for anybody who want to take notes that ain't never heard that before. That was a note time, right? If price is above a PD array, you look for the PD array to support price. If price is below the PD array, you look for the PD array to resist price, right? The true support and resistance, right? That's true support and resistance because the algorithm is using these different PD arrays as support and resistance, right? Not a trend line connected through the candles. It's just these specific imbalances and reference points that the algorithm is using. We place the lines on the chart so that we can visibly see it because our minds, well, my mind can't calculate fast enough to remember that 4101.75 was 50% between this new week opening gap and that new week opening gap. I got to draw the lines to see it. I can't remember all of those numbers, but the algo can. It's a computer. It thinks fast, right? So we're above the price, so we're looking for will it support price, right? So now price is coming down to it. These are hourly candles, not going to stay before you long, so we're going to drop down. Let's go all the way down to skinny minute. We're going to go all the way down to 1 minute, right? Because I don't want to stay before you long. And the 1 minute is going to give us all of the meat and potatoes right up front. All right. So like that, like Tabitha Brown would say. All right, so let's come over here. All right, so right here, when price starts dumping right there, right? Price dumped, dumped, right? Run the Fibonacci. There is a better way I could have done this, but I didn't want to get it off the I didn't want to have to redo the numbers and all of that. See, I didn't have to see it. It won't like stick where I want it to be. Too far. Okay, right here, when price start to dump, run the Fibonacci tool. Right, run the Fibonacci tool in between the two to find out the consequent encroachment. Right, so we're anticipating price being supported by this, right, as it's coming up to it. Right, we're not forcing our will on it. We're just anticipating price to be supported because it's coming down to that area. Right, we're expecting it to just blow through it since it's bearish. But again, we're not forcing our will on the market, right? We're not forcing our will on the market, right? So we've had a break in market structure right here, right? And we retrace back up into this fair value gap, right? Into this fair value gap, and we sold down, right? Now, let's look at this little piece of price. Right, we're just gonna walk through the price. We're not gonna stick to one particular. This is the main focus, but we're gonna walk through the price. Right, so looking at this price right here, this is something that I had to really really I struggle with. I struggle with this right here, right? Because when you're learning to read price, right, it's very important that you understand everything that's going on with price so that you know when to trust your trades, right? It took me a long time to understand balanced price ranges, right? It took me a very long time to understand balanced price ranges, right? I'll just pick anything. Ignore what that says. I'm just picking something, right? This area right here, right? That area right there is a balanced price range, right? So this fair value gap right there, that is a good entry point. It took me a long time to really get that through my head, right? So now, how do I use this piece right here, right? Once I identify a potential balanced price range, right? So I look for, it has the market offered buy side and sell side throughout the range, right? It's a little bit easier to see in consolidation like this. It's easier to see in consolidation like this. So it has offered buy side and sell side. And then when the algo leaves that area, especially when it leaves it with aggression like this right here, these are 1 minute candles. That's a huge 1 minute candle. This 1 minute candle right here is not that big, and that's a huge 1 minute candle right there, right? So everything, what I do, everything from like, just say this is the candle that left, that candle, the candle prior to the candle that left that area, and everything to the left of it, all of that is a balanced price range to me. And I don't expect the algo to go back up into that until it comes down and completes some business. Where does it go to? Who cares, right? But this is the balanced price range. So once I see the balanced price range, then I know the dealing range I need to be looking at. Meaning, if you just wasn't paying attention to this balanced price range, right, you would be tempted to maybe come from this high down to right there, right? Or not there. You will be tempted to either come from this. Come on, snaps. You'll be tempted to come from this high to right this low, because that's what we make the fair value gap, right? And you would be looking at this fair value gap right here, move balance price range. We know who you are now. Bye-bye. Yeah, you will be looking at this fair value gap as an entry, right? Because this is the fair value gap that's right at equilibrium, not this, right? But when you realize this is a balanced price range and price just left that balanced price range, so there's no need for price to go back up in there just yet, then you realize that you can come over here, come down, and use this high right here to that low as your dealing range, because this is the candle right here that told price everything over here is a balanced price range. So you can go to the next candle over wherever the high is, if the high was at the same spot, or if the high was, you know what I'm saying, wherever the high is on that candle over there, then you can go over there. And now this is your dealing range, and this right here is absolutely safe to go in. And even using the ICT concepts that you understand, that anytime there is upside risk, you have to give your stop loss any upside risk. There's a fair value gap here, so you want your stop loss to be at least above that upside risk. You don't want to push it too far and expose yourself to more risk, but you know it's safe to go in here, and you just give it to the upside risk, because the price does not want to come back into this balanced price. And if you notice right there, I just noticed this, right? The low of that candle, when I was like this price over there, the low of that candle is the high of that fair value gap, right? So if you gave it to just above that fair value gap, right, the price don't want to come back into that dealing range. And so if you're wrong, you're stopping yourself out with minimum risk. You're not going way back up here above this high and letting it come back all the way up there to get you. Minimum risk, right? Proper algorithmic, smart money stop management. Yeah, no, I didn't need that. Okay, so back on the event horizon, right? So that was a clean entry, right? And then you're coming down, you want to get that would yield you that was a good 5-point trade right there from consequent encroachment. You got a 5-point trade out of that. Now moving over, let's go check it out. Price is starting to, now these are 1 minute candles now, so take it with a grain of salt, but price is starting to not hit consequent encroachment, right? It's struggling to get to consequent encroachment, right? 1, 2, 3, 4, 5, 6, 7. 7 minutes now, we've been struggling with consequent encroachment. Now, as we all know, anytime price starts to struggle getting to the mean threshold or consequent encroachment, that's something you want to pay attention to, because it made like the bearishness or the bullishness. In this case, we're just talking bearish because the price coming down. I'm not gonna keep flipping back and forth. You know, flipping flip it on. I just saw something. What finally clicked for you to identify the balanced price range? Do you look for consolidation? Do you look for big moves? Okay, I'll answer that in a minute. That's a good question. I'll answer that in a minute. We might be on here for a while, y'all. I said I wasn't gonna stay before you long, but we might be on here for a while. I'm sorry. I mean, I apologize, but I'm so not sorry. I'm on my Kevin Gates all year. I truly apologize, but I'm so not sorry. So if price the bearishness may not be as bearish as thought, right? And why do I say that? Because when price is coming down and it starts to struggle, get into mean threshold or consequent encroachment, the bearishness or bullishness, in this case, bearishness, it may not be as bearish as thought because it's struggling to get to consequent encroachment. Why do you say it's struggling? It was dropping and now it's starting to consolidate without getting there. It doesn't mean that it won't get there, right? I know we got the benefit of hindsight, but we walking through as if we can't see it. It doesn't mean that it won't get there. We're waiting for the market to tip its hand of what it wants to do. We are not forcing our will on the market, right? So why didn't I move? Move, right? Still struggling, right? Come down. We're getting close to it. We still struggling. The market still ain't showing us nothing, right? Going up. We just got a break right there, right? We came down here. We got a break here, right? So we came down. We took out that sell side, but wasn't nothing to write home to mom about. We took out that buy side. So it's like we're consolidating and we're tapping below the consolidation, tapping above the consolidation, right? So now we're moving up a little bit more, right? We come back into this fair value gap in here. All right, let's look at the dollar, see what's going on. I got to squanch it up. I don't like for it to look all stretched out like that. So this whole time you will be comparing it to the dollar too. So as we come down to this spot here, and when we started consolidating there, right? These 1 minute candles. So it's all about the higher time frame, but we just looking at it on the 1 minute together. So come here, come down. All is well in the world here, right? Right there. We're coming down together. There's some divergence going on there because we're coming down together. The dollar has come up and taken out buy side. Now the dollar is showing a little bit of weakness because it can't get back up to this high right here, right? Right there. When the when the ES came below that low right there, the dollar came up. And when it came back up here, the ES came down, took out a low, but the dollar didn't come up and take out that high. So the dollar is showing weakness, right? Weakness on the dollar lends for strength to the ES. So the dollar is showing weakness, strength. So now we're struggling to get to consequent encroachment, and the dollar has taken buy side over here, and now it's struggling to get back to the buy side. So if it's struggling to get to the buy side, that means the bullishness may be petering out. It's struggling to get to consequent encroachment. That means that this bearishness may be petering out, right? But we still haven't been given a solid entry. So we just sitting here watching it, right? So we're pushing up. That's a nice little move up right there. Nice little move up. Now let's go in. Look at, we got a nice little move up. We came up, we came down. We've offered buy side and sell side right there, right? This right here, right? For some, this right here would have presented an opportunity to go in. For me, that's not an opportunity for me to go in because this move up right there, remember when I said we got a break right there? Let's drop this down. Right. I like to point out all things, even if it's not what I would have taken. Right. Let me stretch it out so you can see it well. Right. We come here. Remember when we popped up and I was like, we just got a break here. We got a break above there. Right. If you notice right there, there's a small fair value gap right there. Nope. It's not even a fair value gap in there. I thought it was. It looked like it was. Yeah, it is right there. Oh, that's my line. Oh, that wick. It looked like it's a wick there, but that's my line. That's my line on my Let me take the line off. I'm like, man, I thought it was a fair value gap there. That's my line. There you go. I'm like, I know I ain't tripping. Right there. I'm like, that's my line. Okay. So for some people, this would have been an entry. For me, on the other hand, this move above right here, this is like, for me, like this is a ICT 2022 mentorship entry right here. But the way we just barely, you know what I'm saying, moved up, and the sentiment. Now, if the sentiment was bullish all day long, I would have taken this. But since this is going against the sentiment, right? I personally need more of a kick, if you will, to make me. I don't want to put too much on the screen. Where were we? We were here. Right there. That's where we were, I think. Let me try to shrink this down so I can make these candles bigger. Pulling the wrong thing. I want to make the candles a little bit bigger, but I don't want to. Okay. Okay. Y'all focus. Stop looking at the back of the screen. Stop looking at the back of the screen. Okay. I'll leave that over there so y'all can see what's going on in real time. All right. So this move right here, it just barely got up above the consolidation, right? So for me, I need a little bit more. But right here, like I said, I like to point stuff out that even if I didn't take it. Here we go right here. We came down, right? We took out the sell side here. We're struggling to get to the consequent encroachment, and we have the divergence right there. Remember, I was like the dollar showing weakness. We got the divergence. The dollar came down, broke here, came back up into this fair value gap right there, and then sold off, right? I ain't gonna hold you. With the candles like this right here, walking through the price, I may have taken this trade. Because the other day, the trade that I shared with the black spiders, not the one from yesterday, but the other day, I think it was a trade just like this. It was going against the grain because I want to say I was buying. Whatever video it was when I shared the trade breakdown and I was buying, it was a trade just like this. And it was going against the grain because I was buying. It was, you know what I'm saying, for a small range. But anyway, we came above here. We showed the divergence, pulled back into the fair value gap, and start to push up right there, right? So there's one buying opportunity right there. Would I have taken this or not? We don't know right now because, you know, it wasn't in real time. I wasn't watching the charts. I can't say if I initially, I'm like, I probably wouldn't have took this trade because it's not enough of a move, right? But I may have taken it. Can't say. But again, if we would have like blasted up and took out this high right here, I definitely would have took a trade off of here because it's more of a move up. I like to see the pie. I want it to go, right? I want it to go. So now let's keep moving forward, right? See, like up here, once we got up there like that right there, right now, my interest is peaked. My interest is peaked now, getting up there. And now that I said that, let's pay attention to this, right? We've traded down, taken out sell side. We're like kind of consolidated, traded down again, took out sell side, right? Pushed back up, took out buy side, right? And we came back down to here, right? So now that we've taken out buy side right there, right? Pause due to poor connection. Man, I've been on here for an hour. I've been on here for an hour. I apologize, y'all, but I'm so not sorry. Okay, so right, we leave this area right here. So we come to, right, we've left that area. So we come to this candle right there, and we come back this way. Come back that way, right there. Since this candle spiked up there, we're going to include that wick right there. We're just going to include that wick since it spiked up. Well, we're just going to go to the bodies for right now. We can include the wick, right? We're including the wick now because we see it left again right there. So now that we see it left again, right, like that's a good little leave right there. Let's come over to that candle. Let me not extend this to the right. Right, so we left there, right? So we come to that candle there. We come to the high of that candle there, and we're just going to include these wicks right there, right? We're including the wicks right there. And let's change this to red, right? This right here is going to be our potential balanced price range. That's going to be our potential balanced price range right there. All right, because we just took off. Again, this right here could have been an entry for someone. Still debatable if I would have taken that or not. But like I said, once we took out that high right there, I would have been chomping at the bit for an entry, right? So now we've blasted off. Get back over there. All right. Coming back down. Consolidating there. Starting to consolidate. Drop it like it's hot, right? I'm just clicking over without even really looking at. We're supposed to be watching the price action, but I'm just clicking over without even watching anything. And I noticed it like after it came back down. So, okay, so the balanced price range here, right? We're thinking, hey, price don't want to come back down in this area down here, right? There's the only imbalances down here is the one that actually came down to, right? So now we got a fair value gap when we left this area right here, right? Took off fair value gap right there. So since we got that fair value gap and we left this area, this down close candle right here, we're going to use that as an order block and a fair value gap. I like to enter on the fair value gap. So boom, there's the entry. There's my entry right there for sure, right? Right, there's my entry there for sure, right? And proper stop management, you can put it below this low. How many points? Let's see how many points it is, right? On my initial 1-to-1 for 5, right? entering here at the top of this fair value gap would be 4107.50, and 5 points down would be down here 4702.50, right? Let's put a line down there. 4702, I mean 102.50. I don't know why I keep saying 4702. So entering at the top of the fair value gap, it's a very small fair value gap. So entering at the top of the fair value gap, 4107.50, 4102.50 is the 5 points. I got a static thing that I'm using. You could either put it to below this swing low right here and below this fair value gap. What I like to do, I like to give it at least 1 point below. So if you want to use that one, we'll come down. The low of that fair value gap is 4105.50. So it'll be 4104.50 if you go there. So let's put a line there, right? That's for the using the PD array. This is a very tight stop. I wouldn't recommend a 3-point stop. What's the low on that? Well, we said 4107.50. I wouldn't recommend a 3-point stop, but that's a 3-point stop. Now let's see how it plays out. Let's see the 3-point stop and the my customary one for one setup, right? And then safe stop management would be below this low, right? That's the lowest low from here. So that's the safe stop management. Let's do one for that too, right? So the low on the lowest low is 4107.75. I like to give it 1 point. So that'll be, I got it right there. No, the low, it's not 4107. The low on this candle is 4101.75. Yeah, it is. Yeah, 4101.75. So that candle did come down and kiss that. I don't know why it's don't look like it's touching it, but it says that. I know I'm not tripping. It says that the low of that candle is 4107.75, but it's not touching that line. Okay. We'll work with it. So copy this. Move this down to right there. So let's see how all the stops fare. The very tight stop, 1 point below the low in the fair value gap, the static 5-point stop, and the safe SMT stop. We got the tight the smart money stop, my customary 5-point static, and the safe smart money. Smart money stop. Now let's move forward. Tim, hurry up. You take too long, right? Consolidate and consolidate. Uh-oh. Got close right there. Got close right there. Ooh, one tick away. On the tight stop. Here we go. Everybody was safe. Everybody made it. Everybody made it out. Then we hit 5 points. Let's see if we got 5 points. Yes, we did. Oh, wait a minute. Did we get 5 points? Yes, we did. 4112.50. Boom. There you go. Everybody made it. 4112.50. Everybody made it. The tight stop. Whoo! Butt cheeks clenched up. Sound like a horse. Now, so we started out talking about the event horizon, right? So price came down and started consolidating on top of the consequent encroachment, right? That's when we got successful right there. Now, let's review what we just talked about, and then we'll get into the questions, right? So, price dropped below the new week opening gap. We ran the Fibonacci to find out the consequent encroachment. Price started to struggle as it was approaching consequent encroachment, right? So now we're thinking the dollar is showing weakness. The dollar is showing weakness here. The ES is consolidating. We have been dropping for a while. The bearishness may be running out for the short term. The sentiment is still bearish. This may be an opportunity to catch along for, because when you're going against the grain, you want to look for short 5-point moves. You want to look for more than 5 points going with the grain, right? We start to consolidate. The market got a break in market structure, right? Gave an opportunity to enter here. It wouldn't have been the one I would have been looking at first. But if you come back and look, it gave another opportunity on that same spot. I just noticed that. Gave another opportunity on that same spot. Right there. Right. That was the first chance. That was the second chance. Right. I just noticed that. So after we left this area, we identified this as a potential balanced price range. Right. As a potential balanced price range. Right. And if you notice, remember the first balanced price range that I started looking at when I was, remember the first area when I was looking at it as a balanced price range, this one right here, right there. Notice where price came back to and stopped at. Came right back and stopped at that down close candle right there. It came down to that down close candle just before leaving that area. When it got down to that candle right there, price was like, hey, you trying to go too far, buddy. Got back up off of it. Came back to it again. This time it rested on top of the candle. And then it left. That was the very first area we started looking at as the balanced price range. And then once we got this move right here, I was like, hey, let's just use this one. Right? Let's just use that one. Right there. But this right here, right there, that was the real balanced price range right there. The very first one we started looking at, and then I moved it over there because I started talking about that wick. And I was like, hey, let's just use this one over here. Right? But there you go right there. That candle before leaving, that's how I personally gauge it, right? Then the rest, Bob's your uncle. You know how it played out. Now, let's go over here. And let's go. I know Here to Learn the Shit, I had one, but let me what did you say that dad at line is? What did you say that dad at line is? Oh, dotted line. This dotted line right here. If you talk about this dotted line right there, I thought he was asking if you eat chalk. Me too. What? I'm lost. I think I went back too far. CE between new week opening, guys. Okay, I stepped away. Thank you. Oh, okay, yeah. So this dotted line right here, that's just my Fibonacci to give me the consequent encroachment. Like it ain't. Let's see. Squanch this. My wife said, "What squanch, baby?" Squanch this down. So you can't see the if this is the dotted line you talk about. If not, I'm just doing a lot of talking for nothing. But if I change this to a regular Fibonacci tool, that's not helping either. Let me go ahead. How do you go to defaults? See, this is just a Fibonacci tool in a straight line. It's just in a straight line, right? And if I move something over. See, if I spread it out, it just was in a straight. I just had it up in a straight line. Just a regular Fibonacci tool, right? Just a regular Fibonacci tool. And then if I and then I just got my default set up so I can see consequent encroachment. And the way I got it set is it don't show me nothing but the trend line and the 50%, right? It just shows me the trend line and the 50% line so that I know where the consequent encroachment or the mean threshold is. And that's all it is right there. So the main thing I'm looking at is just that 50% line. I'm not really looking at that. And then on some, I think on my Ninja Trader, I don't even think I could see the trend line on the Ninja Trader. I think it looked like this on Ninja Trader. It's just that black line right there on Ninja Trader. It's white on Ninja Trader, of course, but that's how it look on Ninja Trader. So it don't be like a lot of stuff on there mess with my eyes. They have a couple hand data indicators for new week opening gap event horizon as well. I like them myself, but when I'm in a lazy mood, I'll throw them. Oh, I guess you meant I don't like them myself, but when I'm in a lazy mood, I throw them. Okay. What finally clicked? That's what I was looking for. Okay. What finally clicked for you to identify balanced price range? Do you look for consolidation ranges? Do you look for big moves in one direction, then back into the range? Okay, good question, right? Balanced price range. I kind of touched it when we was talking through, but the balanced price range can work if it's it's easier to see them in the consolidation, right? It's easier to see them in the consolidation because in the consolidation, you can clearly see that it's offering sell side, buy side, sell side, buy side, sell side, because they're constantly overlapping, right? The price is constantly overlapping, right? And the price overlapping doesn't make it the balanced price range. What makes it the potential balanced price range is when price leaves. When price leaves that area, right? This candle right here, in this case, this 1105 candle, in this case right here, this candle is what deemed this area right here where all this buy side, sell side, buy side, sell side, buy side, sell side. This candle right here is what deemed this a potential price range, right? So that's why I always go to the candle that left, and then I go one candle prior, right? That be the candle I'm using for the last line of defense for coming back into that balanced price range, right? So it can be in a, like over here, right? This is sort of consolidation, but not, it's like a bigger range. It's like more of a range, right? So we consolidated here. We made an up move. We made a down move, right? We made an up move, and then we left right there. We left right here. So this ain't really consolidation, but when we dig into it, we got sell side, buy side, sell side, buy side, sell side, a bunch of buy side, then a bunch of sell side to take up. Taking up all this bunch of sell side, we left an imbalance right here. So we went back up into the imbalance, got up into that imbalance too, right? Came back down, consolidated a little bit, and then we left that area. So this is the candle that left the area, right? Some would even argue that this green candle is the candle when we got outside the area, but this is the candle when we left the area, right? Pew, we left the area. So from this candle here Come here. Can I borrow you? Can I borrow you? Come here, guy. Come here, little guy. Come, there you go, little guy. Right? So I'm looking from this candle right here back this way up to the high of that range. I'm looking at that as a potential balanced price range, right? Why? Because this 1242 candle, we left that area right after offering buy side, sell side, buy side, sell side, buy side, big buy side, big sell side. In the wake of this big sell side, aka right? We left for imbalance. Price quickly retraced up into those imbalances, took care of them, right? Buy side, sell side, buy side, sell side, buy side, side, and then left, right? That leaving, okay, this is a potential balanced price range. And as you see, we came down here, we did our work that we said we was going to do. And then when price came back up to where did it come to? Back over here to these candles, overshot him just a little bit, but we came into what? This last down close candle, right? This last down close candle after leaving this little piece of area right there. If you ignore these wicks, right? If you ignore these wicks, because the bodies tell the story, wicks do the damage. This candle, right? This 1040 candle is the first one that actually left the area of the bodies. But I don't get that technical. I use the whole candle. So this right here, right? Give an allowance up to there. If you go to this one here, this last candle there before that candle, right? Where the price come to? Right back to that candle right there, right? But I don't get into, like, I use the whole candle. I want the entire candle, right? So boom, we come back up, overshot that candle a little bit, hit this last down close candle, kept it in bay, and then dropped it like it's hard, right? That's how I start to identify the balanced price ranges, and where price can potentially go back to. And let's look into this on an hourly time frame. If I was a gambling man, I would say that there was some type of higher time frame imbalance in this area right here, right? And I'm not a gambling man, but why do I say it's some type of imbalance in this area? You see where I'm moving my mouse right here? Can anybody put in the chat why I'm saying that there's some type of imbalance in this area right here on a higher time frame? Why am I saying that? Can somebody put in the chat? Why am I saying it? While I look to see if there's any more questions in here. Great job, Tim. I'm not a trader yet, but you have my attention. Keep mentoring. Hey, I appreciate that, Audrey. It was the dotted line you had on. Oh, the dotted line on Ninja Trader? Okay, I'll look at that in a minute. The whole move happened during the macro time. Yes, sir. Okay, I ain't even noticed that. I wasn't even paying that no attention. You're very welcome. Nobody put in there why they think I said it's going to be a higher time frame situation right up in here. Right. Okay, let me break it down. Remember back in the ICT core content, and even before the core content, he used to teach about like liquidity voids because it left a range. Because it left the range and came back to it possibly. Yes and no. Yes and no. But yes, because it came back to it and dropped. That's why I say yes and no. But the main reason why I was circling right over here, remember back when ICT was teaching about liquidity voids, and I was like, I don't really like that one, because I think a liquidity void is a full gap with no trading. And then he came back out later saying he was just teaching this as liquidity voids because that's what the people on Baby Pips was calling it. And instead of him struggling and trying to convince them that it wasn't, he just, was using it as liquidity voids to like not be a stumbling block to their learning, right? So we got these consecutive down close candles right here, and that's what he was teaching as a liquidity void. But he He actually said that's not a true liquidity void. A true liquidity void is no price at all. And I was right. I feel good about that. Now, since we got this quasi pseudo liquidity void there, where we got just downside, down, sell side, sell side, sell side, with very little attempt to go back, I'm saying, hey, there's going to be some type of higher time frame imbalance in this area right here, right? Because we got sell side, sell side, sell side, sell side, right? And what is a fair value gap? A fair value gap can be a buy side imbalance, sell side inefficiency, or a sell side imbalance and a buy side inefficiency. So in this area right here, the predominant move, right, is down. We came down very fast. You know what I'm saying? We came down very fast. Once we get out of the, like in this, it's coming from this high right here, right? That's at 1035, right? And then when we get all the way down to the low, that's at 1050, right before 11 o'clock. So we closed like right around here. So all of this right here is inside the 10 o'clock candle right there. That's a very big move, right? That's a very big move. And then we came back up into it. So I'm like, it's going to be some kind of imbalance in there. So let's go up. Let's go up. See what's going on. We're going to go to the 15-minute. See what the 15-minute look like. I don't know where my chart went. I don't know where we were now. I should have put a square. I should have put a square there so I know where we were. Oh my. I'm real lost. I'm real lost now. There we go. All right. So we see there, we got a 15-minute fair value gap right there. Right there. That's that big drop area right there. There's a 15-minute fair value gap right there. We got a 15-minute implied fair value gap right there. Where did we come? Right here. This is the candle right here. So we got a 15-minute implied fair value gap right there. We got, let's mark these out. Let's mark these out and see, because I know it's going to be some imbalances over there. At first, I was going straight to an hourly, but we're going to get to the hourly, but let's just walk it back up. 15-minute, then the hourly. Right. Of course, I don't have a 15-minute in here. Just going to do the 5-minute. Just going to do the 5-minute. Right. And then we got an implied fair value gap in here. We got an implied fair value gap in here. That we didn't even get to it. We didn't get to the implied fair value gap there. Okay, now let's go to the hourly. Let's go to the hourly. This is the candle right here. Right there, boom. So on the hourly, this is when we made the fair value gap on the hourly. All right, so on the hourly, us coming back up into that, coming back close to that. There's no hourly. This is when we made the hourly fair imbalance. Okay, so this candle we was looking at is when we made the hourly imbalance. This hard drop down right there, that ended up being the SIBI, right? So later in the day, that hard drop down ended up being the SIBI. At the time frame that we was looking at it coming back up into it, the only thing that was there was the new week opening gap. You can see where price respected the 15-minute fair value gap, where we went up, where we had spiked up, right? The body of this 11 o'clock candle respected that 5-minute fair value gap. That was the only imbalance The wick did the damage. The body respected it. Didn't get to the implied fair value gap. And then that sell-off that we was talking about inside the 10 o'clock candle later on in the day, that ended up being a hourly fair value gap. Right there in line with that implied fair value gap. Wicks do the damage. Bodies respected. So now let's go back down to the hourly. I mean to the minute, and see when we got back to that. This ain't got nothing to do with the price T in China, but this is kind of stuff that you have to have in the back of your mind when you're reading price. All right. So right here, when we looked at this right here, this big drop down, that's the big drop I was talking about. It eventually turned out to be an hourly. This is when we made the fair value. This drop here, right, was the initiation of a SIBI. And this high right here is what created the SIBI right here. This is the top of the. Let me make this another color so y'all can see that good. Yeah, we'll go with the orange, darken it up right here. All right. So that candle right there, that 1137 candle right there, the high on that candle is what made the low of that SIBI right there. That's what made the low of the SIBI. Then we dropped back down and then came back into it. First touch of it was at 2:04 p.m. Right? Got to the top of it, came back down, went back up to it, and just kind of dilly-dallied around with it for the rest of the day. And then now we dilly-dallied around with that for a long time. A couple bounces off of it. Came all the way down from it. Came back down in that area there, pushed up, consolidated in it again, pushed down again. We flirted around with that fair value gap for a minute. That thing was important for a long time. Man, we done did all that this morning. It's at 7. It's at 7. It's at 8 o'clock this morning. Man, we done did all this morning while I was up here running my mouth. 8:40. We dropped down. Oh, yeah, we didn't do the overnight price action. I'm like, man, when did we didn't do the overnight price action? Okay. Then we done came down, ran out the sell side, and then moving back up. And again, oh, look at there again. We came back again, right? We did the same thing. The same thing we was just talking about over here. We just did it over here. We just did it this morning. The same thing we was pointing out over here as the teachable moment. Look at there. We just did the same thing again. Right there. We came down below. Remember, the black line is, let me move these stops. Move, stop, move, stop, move, stop. I don't need any of this. Don't need that. I really don't need any of this. Right? Look, we just did the same thing. Right? We came down. Look at that. Price even was respecting these other fair value gaps that was in there. Did y'all notice that? Go back. Don't need the stops. Look at it. These old fair value gaps. Look what price doing to these old fair value gaps. True support and resistance. We came down, sat inside that fair value gap, pushed down to the next one, pushed back up, came back up here to this, kissed that volume imbalance, pushed back down, paused at it one more time, came down to the consequent encroachment, right? Started to consolidate below it. So we're watching. Is it going to keep it below it or drop it, right? Price popped back up, right? Left this area right here. Left this area right here. Let's go in here. The candle before it. Stretch it out. Go to the low. Candle before it. Stretch it out. Go to the low. Potential balance price range. Price just left. That's a potential balance price range. Come back into the fair value gap right there. Come back into that last candle before it. Take off again, right? That was an entry right there. Take off again right there. Took out the buy side. Bob's your uncle. Just did the same thing we was talking about over there. I really wish we would have been paying attention to this so you could have seen it in action for real. But it just did the exact same thing, right? Came back up into this fair value gap right there. Pulled back down into the fair value gap that we was talking about. Stopped at that candle. Took off again, right? Break, came back down into this fair value gap right here. That fair value gap is what? A part of this price move right here up to the high right there. That fair value gap is at what? Equilibrium. What is this right here? An institutional order flow entry drill of this fair value gap right there at equilibrium. Right? Boom. There's your move off of the institutional order flow entry drill. And let me see, did it give you consequent encroachment? Did not get consequent encroachment. You got institutional order flow entry drill pushed up 45 points. All right. Now price is coming back down into that fair value gap again. Right? Now, do you trust it? I don't know. That's when you go in and look at your look for divergence. Look for, because you got a break under this right here, come back up into a fair value gap and it's pushing down. You would go in, look for your divergence, look for signals that, hey, it's still a time to buy. I can trust this to buy off of for the second time. Or you go in and say, hey, we've taken out sell side, a buy side over here. Is it still time to sell? You know what I'm saying? Is it still time to sell? Can't you know what you just go in and you look at all of the yada yada yada. But I done been on here for an hour and 38 minutes and I'm hungry. And my sweetie is off today. And I'm tired of talking. Thank you. You're far too kind. Are there any questions for the 42 people that still hung out with me? You're very welcome for going. Oh, y'all said a dotted line on Ninja Trader. Y'all had said a dotted line on Ninja Trader. Oh, that's the same thing. That was the same thing. The dotted line on Ninja Trader. Yes, that was the same thing. It was the consequent encroachment in between the new week opening gaps. It was the same thing. Over the same thing I was talking about here with this black line there. Yeah, it was the same thing. Like remember I said on Ninja Trader, you can't see nothing but the line. You like if I highlight it, then you can see those dots, let you know where the Fibonacci tool is actually anchored to. It's anchored from there to over there. Right. So, but all you can see is the dotted line. So it's the same thing. It was the Fibonacci tool. You're welcome. Here to learn to share. You're welcome, Otis. If there's nothing else, that's it. I appreciate y'all for always tapping in. I think you're welcome. Go eat his bedtime with the wifey. We appreciate you too. Managing risk today, staying profitable for the week, and just spectating paper. That's what's up. Congratulations on just managing risk. Congratulations on understanding what it is to, remain a profitable trader. What all it takes to remain profitable is risk management. That's all it takes to remain profitable. You're welcome. You're welcome. You're welcome. Everybody, have a blessed, vainglorious day. Thank you. Thank you. Thank you. Thank you. Thank you. You're far too kind. Have a blessed, vainglorious day. Everything I talked about today, if you do not know, are concepts that are taught by Michael J. Huddleston, aka ICT, the Inner Circle Trader. You can find all the details about it on his YouTube page. I highly recommend you going through his 12 playlists of his core content. The first one is like 2016 core content. And then after that, it's like core content month 2, core content month 3. I recommend you going through all 12 playlists. If you can't stomach sitting through ICT, I have 3 playlists that go over all of the concepts in a small digestible format. I give it to you the way he said it, and I give it to you the way I understand it. There's a lingo playlist, ICT concepts lingo, ICT concepts price action, and ICT concepts strategy. If you don't know the concepts, go through those playlists. I recommend Michael's first, then mine will be a secondary, and then just tap in with us every day. Go back and look at the 2023 tape reading videos that he do. They're very educational. It's a lot more impactful looking at it in real time, but go back and look at those. It's very, very educational. Then just tap in with us every day, man. We're gonna get there. We're gonna get there. I like our progress. ICT doesn't have rants on his old material. It's a few of them where he rant. Like he rant more now because he does stuff live. But the older stuff is all recorded. Because he tell you now, he be like, I used to edit all this out. He was like, I used to do this same stuff, but I had the luxury of editing it out. So his old material is not a bunch of rants, but the newer stuff, it's like live, and then the Twitter spaces are live. But the stuff when he's given like a edited video, the rants don't be there. It's just like, you know, he's not animated. He's got a very monotone voice. It puts you to sleep. I've fallen asleep many a nights looking at his videos. Hey man, that's it. I'm hungry. I'm about to go. I'll see y'all tonight at 6:30 p.m. if I don't fall asleep. Hey man, y'all enjoy y'all day. If you go trade, please trade safe. If you're not gonna trade, please take a copious amounts of notes so you can go back and study what you saw today. I'll see y'all at 6:30. Gone. Yep.